The US dollar can celebrate its triumph at the beginning of the week on the back of the risk-off mood. Today, the macroeconomic background in the United States is dull, so the market is focused on the global picture. Today, the market is alarmed by a series of downbeat PMIs from China and Europe. Hence, investors are shifting focus towards safe haven assets, in particular the US dollar. Global risk aversion dampened optimism on Wall Street, and the benchmark stock indexes traded mixed in the New York pre-market. Financial markets in the United States were closed yesterday on the occasion of Labor Day. That's why the major stock indexes traded mixed in the New York pre-market today. Futures on the Dow Jones retained some optimism and inched up by 0.16%. The Nasdaq and the S&P500 shed 0.38% and 0.09% respectively. The S&P is expected to trade in the intraday corridor between 4,470 and 4,540 points. The major stock indexes were poised to decline today because rising yields of the US Treasuries put pressure on the US stocks. Despite minor changes in the Fed's interest rate expectations, the yield on the 10-year Treasuries, which had sharply increased shortly before the weekend, continued to rise. And the yield on 10-year Treasuries rose to 4.23%, and the yield on 2-year bonds increased to 4.93%. The luster of safe assets was boosted by the latest macroeconomic data from China and Europe, reflecting a global slowdown in business activity. In August, China's service sector activity grew at its slowest pace in 8 months, as indicated by private sector research, as a weak demand continued to plague the world's second-largest economy. Moreover, stimulus measures failed to revive consumption. In this context, shares of Chinese companies listed on US exchanges, including JD.com, Baidu and Alibaba, fell by 0.7% and 1.5% before the opening bell. The global picture was complemented by data from Europe. The data showed an even larger reduction in business activity than the flash estimates for August. The composite index tumbled by nearly 2 points to 46.7 in August, a low not seen since November 2020. A shift in risk sentiment and the rise in treasury yields quickly led to losses among fast-growing megacaps. Shares of high-tech giants such as Apple, Nvidia, Meta and Netflix lost between 0.3% and 1.7% in the pre-market. Against the backdrop of the rest of the world, the US economy looks much more resilient. Goldman Sachs has lowered the likelihood of a recession in the United States in the next 12 months to 15% from 20% amid the ongoing inflation decline and the labor market data. Today, after the opening bell, investors are awaiting data on factory orders for July, although it's unlikely they will significantly influence market sentiment. Wall Street's more significant reports will be assessed on a Wednesday, so market trends will take on a clearer shape. Meanwhile, despite earlier declines, the picture for Wall Street remains fairly positive. Economic data post the July Federal Reserve meeting reinforced the impression that the economy is cooling but not cracking, bolstering arguments against further rate hikes. The employment situation in the US underscores the consensus regarding a soft landing and shows signs of a cooling, and this also gives hope for a dovish shift in monetary policy. As for individual stocks, Warner Bros. Discovery shares dropped by 0.8% after the media company lowered its annual core profit forecast due to strikes by Hollywood screenwriters and actors. While the stock market is unable to shape clear-cut sentiment, the US dollar is held in the upper hand over its rival currencies. Its index is on a track to print new highs. The US dollar index is trading at 104.63 at the time of recording this video, 0.38% down. The intraday CAD is determined between 104.10 and 105 points. Investors are worried that global economic growth is losing momentum, especially in China. Such concerns encouraged the rally of the safe haven dollar against the yen, euro and the pound sterling. The Australian dollar was bruised the most, having slumped by 1.6%. The yen, euro and sterling suffered due to global economic headwinds and the weak PMIs. The Aussie dollar fell prey to the Reserve Bank of Australia. The Australian dollar approached the lowest level in a year because the central bank maintained interest rates unchanged at 4.1% for a third month in a row. Though the Australian central bank left the door open for further rate hikes, the market expects no more rate increases. Such expectations have already been priced in. Adding to pressure from the central bank, the Aussie is also sensitive to China's flagging economy. For these reasons, the Aussie lost 1.6% against its American counterpart, but later cut the loss to 1.2%. The dual strength of the US dollar, higher treasury yields and weaker growth conditions outside the United States are pushing the dollar index to new highs. Thus, the greenback is flexing its muscles in the currency market. The Canadian dollar is also feeling unreal. The loonie is overshadowed by the firm greenback, lacking energy. The USD CAD is now trading at 1.3620, 0.22% up. The instrument is likely to trade in the intraday CAD between 1.3590 and 1.3650. The large-scale advance of the US dollar across the board significantly impacted the loonie as well. The US dollar reached a multi-month high against the Canadian dollar, rising to 1.2669, the highest level since March, but it retreated closer to the opening bell. Oil prices, which woke up and went up ahead of the opening bell, mitigated the blow to the loonie. Brent crude oil futures rose by 1.5% to $90.37 per barrel, while WTI increased by 1.6%. Despite the prospects of a significant decrease in demand, oil was supported by concerns over production cuts and thus supply. Tomorrow, the Canadian dollar is facing a challenge as the currency waits a crucial interest rate decision from the Bank of Canada, which is likely not to opt for a rate hike. The crypto market does not reveal a glimmer of hope. Crypto assets are trading sluggishly without a clear-cut trend. They give lukewarm responses to a slew of optimistic and pessimistic forecasts. Bitcoin is drifting lower today, and it's trading at about 25,740. 0.4% down. Popular altcoins are trading more robustly, wavering between drops of 1.3% and gains of 1.6%. Notably, most of the tokens are trading in the green. Former chairman of the Securities and Exchange Commission, Jay Clayton, and analysts at JP Morgan share the viewpoint and predict that a Bitcoin ETF will be green-lighted sooner or later. Still, the market does not seem to benefit from such forecasts. As a result, Bitcoin continues to move within a sideways channel. Thus, traders can earn something from minor price fluctuations. Meanwhile, the coin stubbornly remains above 25,700. If it fails to hold, it might head towards 25,400 and possibly lower. An alternative scenario suggests a recovery above $26,000. Make profits with the InstaForex and welcome to leave your comments down below. Let's make our TV channel better together and see you online tomorrow.